Question 1. An insured purchased a 10-year level term life insurance policy. What does level refer to in this policy? A. The premium payments remain constant over the 10 years. B. The policy's cash value grows at a level rate. C. The death benefit remains the same throughout the policy term. D. The policy can be renewed at a level premium without evidence of insurability. Answer: C. The death benefit remains the same throughout the policy term. In a level term life insurance policy, the level aspect specifically refers to the death benefit, meaning the payout to the beneficiary remains constant for the entire duration of the policy term, in this case, 10 years. This offers predictable coverage because the amount of protection does not decrease over time, providing a consistent financial safety net for the insured's dependents. While premiums often remain level for the term as well, the core characteristic of a level term policy is its unchanging death benefit. Remember, level term means a level payout. Question 2. Which of the following is typically excluded from coverage under a standard individual health insurance policy? A. Emergency room visits for accidental injuries. B. Routine physical examinations. C. Self-inflicted injuries. D. Prescription medications for covered illnesses. Answer: C. Self-inflicted injuries. Standard health insurance policies almost universally exclude coverage for self-inflicted injuries, as these are not considered accidental or unforeseen events that the policy is designed to cover. The purpose of insurance is to protect against losses from unknown or uncertain events, and intentionally harming oneself falls outside this scope. Coverage for emergency room visits, routine checkups, and necessary prescriptions for covered illnesses are generally included to varying degrees depending on the specific plan. Always be aware that intentional acts often invalidate coverage in insurance contracts. Question 3. A policy owner cancels their whole life insurance policy and receives an amount of money back. This is known as A. The face amount. B. The surrender charge. C. The cash value. D. The dividend. Answer: C. The cash value. When a policy owner cancels a whole life insurance policy, they are entitled to receive the accumulated cash value, which is the savings component that builds up over the life of the policy on a tax-deferred basis. This cash value represents the equity built within the policy and is accessible through policy loans or surrender. The face amount is the death benefit, a surrender charge is a fee for early termination, reducing the cash value, and a dividend is a share of the insurer's surplus. Think of cash value as your equity in the policy that you get back upon surrender. Question 4. What is the primary purpose of an elimination period in a disability income policy? A. To allow the insurer to investigate the claim. B. To reduce the number of small claims and the cost of the policy. C. To determine the severity of the disability. D. To provide immediate benefits to the insured. Answer: B. To reduce the number of small claims and the cost of the policy. The primary purpose of an elimination period, also known as a waiting period, in a disability income policy is to reduce the number of short-term disability claims and, consequently, lower the overall cost of the premiums for the insured. By requiring the insured to wait a certain number of days before benefits begin, the policy avoids paying for minor illnesses or injuries that resolve quickly. This mechanism helps keep disability insurance affordable, as the insurer only pays for longer-term disabilities. Consider it like a deductible for time, making the policy more economical. Question 5. An agent selling a variable life insurance policy must be licensed in A. Life insurance only. B. Securities only. C. Life insurance and securities. D. Life insurance and property/casualty. Answer: C. Life insurance and securities. An agent selling variable life insurance policies must hold both a state life insurance license and a securities license, specifically, a FINRA Series 6 or 7, because these products contain investment components that fluctuate based on the performance of underlying separate accounts. The cash value and death benefit of variable policies are not guaranteed and are tied to market performance, making them regulated as securities. This dual licensing ensures that agents are qualified to explain both the insurance and investment aspects of the product. Always remember that variable means market risk and therefore requires a securities license. Question 6. All of the following are characteristics of a health maintenance organization, HMO, except A. Emphasis on preventive care. B. Subscribers pay a fixed periodic fee. C. Members choose any physician or hospital. D. Care is provided by a limited network of providers. Answer: C. Members choose any physician or hospital. A key characteristic of a health maintenance organization, HMO, is that members are typically required to choose a primary care physician, PCP, within the HMO's network and obtain referrals to see specialists, meaning they do not have the freedom to choose any physician or hospital outside the network without incurring significant out-of-pocket costs. HMOs emphasize preventive care, operate on a prepaid basis with fixed periodic fees, and control costs by limiting choices to a specific network of providers. This restricted choice helps manage costs and coordinate care. Question 7. The clause in a life insurance policy that prevents an insurer from denying a claim due to a misstatement on the application after the policy has been in force for a certain period, usually 2 years, is known as the A. Grace period clause. B. Reinstatement clause. C. Incontestability clause. D. Misstatement of age clause. Answer: C. Incontestability clause. The incontestability clause is a standard provision in life insurance policies that prevents the insurer from denying a claim based on misstatements in the application after the policy has been in force for a specified period, typically 2 years, even if the misstatement was material. This clause protects the beneficiary from an insurer attempting to rescind the policy years after the insured's death due to an oversight or unintentional error made during the application process. It provides assurance that once the policy has been active for the designated period, the insurer's right to contest its validity is limited. Question 8. An individual covered by a group health insurance plan leaves their employment. Under COBRA, how long can they typically continue their health coverage? A. 12 months. B. 18 months. C. 24 months. D. 36 months. Answer: B. 18 months. Under the Consolidated Omnibus Budget Reconciliation Act, COBRA, most individuals who experience a qualifying event, such as termination of employment or reduction in hours, are eligible to continue their group health benefits for a maximum of 18 months. This federal law allows former employees to maintain continuity of coverage, though they typically must pay the full premium plus an administrative fee. Certain qualifying events, like a spouse's death or divorce, can extend coverage for dependents up to 36 months, but for employee termination, it's generally 18 months. Question 9. Which of the following is a characteristic of a non-participating life insurance policy? A. It pays dividends to the policy owner. B. It offers a lower initial premium than a participating policy. C. Its cash value growth is tied to the insurer's investment performance. D. It can be converted into a different policy type. Answer: B. It offers a lower initial premium than a participating policy. A non-participating life insurance policy does not pay dividends to the policy owner, as it does not participate in the insurer's surplus. Because these policies do not share in the company's profits, they generally offer a lower initial premium compared to participating policies. Participating policies, conversely, tend to have higher initial premiums but may return a portion of the premium as a dividend if the company performs better than expected. Remember, non-participating means no dividends and often a lower upfront cost. Question 10. All of the following are common exclusions found in a major medical expense policy except A. Cosmetic surgery. B. Experimental procedures. C. Care for non-occupational injuries. D. Self-inflicted injuries. Answer: C. Care for non-occupational injuries. Major medical expense policies typically cover care for non-occupational injuries, meaning injuries that do not arise out of or in the course of employment, as occupational injuries are usually covered by workers' compensation. Common exclusions in these policies often include cosmetic surgery, unless for reconstructive purposes following a covered accident or illness, experimental procedures, as their effectiveness is not proven, and self-inflicted injuries, as they are intentional acts. Understanding these exclusions helps you explain what a policy will and will not cover. Question 11. What is the primary purpose of the guaranteed insurability rider in a life insurance policy? A. It allows the policy owner to purchase additional coverage without evidence of insurability. B. It guarantees the policy will never lapse. C. It ensures the premium will never increase. D. It guarantees the policy will pay out upon the insured's death. Answer: A. It allows the policy owner to purchase additional coverage without evidence of insurability. The primary purpose of a guaranteed insurability rider is to allow the policy owner to purchase additional amounts of insurance coverage at specified future dates or events, like marriage or birth of a child, without needing to prove their insurability again. This means that even if the insured develops a serious health condition, they can still increase their coverage, which is a significant benefit. This rider is crucial for individuals who anticipate their insurance needs growing over time but want to secure their ability to expand coverage regardless of future health. Question 12. A policy owner stops paying premiums on a whole life policy and chooses the extended term non-forfeiture option. What will happen to the policy? A. The policy will continue as a paid-up policy for a reduced face amount. B. The cash value will be paid out to the policy owner. C. The policy will continue for the original face amount for a limited time. D. The policy will lapse with no further benefits. Answer: C. The policy will continue for the original face amount for a limited time. When the extended term non-forfeiture option is selected, the existing cash value of the whole life policy is used as a single premium to purchase a new term life insurance policy for the same face amount as the original whole life policy. This term policy will remain in force for a specific period, which is determined by how much the cash value can purchase. This option provides the maximum immediate death benefit protection, but only for a finite duration. It's like using your accumulated savings to buy temporary protection at the original coverage level. Question 13. Which type of annuity begins making payments immediately upon purchase? A. Deferred annuity. B. Flexible premium annuity. C. Immediate annuity. D. Variable annuity. Answer: C. Immediate annuity. An immediate annuity, also known as a single premium immediate annuity, SPIA, begins making income payments to the annuitant usually within 1 year of purchase, typically within one payment period, e.g., monthly payments start next month. This type of annuity is purchased with a single lump sum premium and is designed for individuals who need an immediate and predictable income stream, often retirees looking to convert a portion of their savings into guaranteed income. Deferred annuities, by contrast, delay payments until a future date. Question 14. What is the purpose of the Medical Information Bureau, MIB? A. To provide health insurance to individuals with pre-existing conditions. B. To facilitate sharing of medical records between doctors and hospitals. C. To collect and share medical and hazardous avocation information about applicants among member insurers. D. To regulate the insurance industry and protect consumers. Answer: C. To collect and share medical and hazardous avocation information about applicants among member insurers. The Medical Information Bureau, MIB, is a non-profit association that acts as an information exchange for member life and health insurance companies. Its primary purpose is to detect and prevent fraud and misrepresentation by applicants, providing insurers with coded summaries of medical conditions, hazardous avocations, and other risk factors discovered during previous insurance applications. This helps insurers in their underwriting process by flagging potential discrepancies without disclosing specific medical records, ensuring fair and accurate risk assessment. Question 15. The grace period in a life insurance policy typically allows the policy owner how many days after the premium due date to pay the premium before the policy lapses? A. 7 days. B. 15 days. C. 31 days. D. 60 days. Answer: C. 31 days. Most life insurance policies include a grace period of 31 days following the premium due date, during which the policy remains in force even if the premium has not been paid. If the insured dies during this grace period, the death benefit will still be paid, but the unpaid premium will be deducted from the proceeds. This provision offers policy owners a safety net and prevents accidental policy lapse due to a slight delay in premium payment. It's a critical consumer protection feature ensuring continuous coverage for a short time after a missed payment. Question 16. An insured has a health insurance policy with a $500 deductible and an 80/20 coinsurance clause. If the insured incurs $3,000 in covered medical expenses, how much will the insurance company pay? A. $2,000. B. $2,400. C. $2,500. D. $3,000. Answer: A. $2,000. To calculate the insurer's payment, first subtract the deductible from the total covered expenses, $3,000, total, $500, deductible, equals $2,500, remaining balance. Next, apply the coinsurance percentage. The insurer pays 80% of this remaining balance, so 0.80 asterisk $2,500 equals $2,000. The insured is responsible for the $500 deductible plus 20% of the remaining $2,500, which is $500, totaling $1,000 out of pocket. Always remember to apply the deductible first, then the coinsurance percentage. Question 17. Which settlement option in a life insurance policy provides for payments to the beneficiary for their entire lifetime, regardless of how long they live? A. Fixed period option. B. Fixed amount option. C. Interest only option. D. Life income option. Answer: D. Life income option. The life income settlement option, also known as a life annuity option, provides the beneficiary with a guaranteed income for their entire lifetime, regardless of how long they live. While the total payout may exceed or fall short of the policy's face amount depending on the beneficiary's longevity, the assurance of a lifelong income stream is the primary benefit. This option is particularly useful for beneficiaries who need ongoing financial support and want protection against outliving their funds. Question 18. What is the primary purpose of a buy-sell agreement in a business using life insurance? A. To fund employee retirement plans. B. To provide a guaranteed market for a deceased owner's share of the business. C. To cover business liabilities in case of bankruptcy. D. To offer health insurance benefits to key employees. Answer: B. To provide a guaranteed market for a deceased owner's share of the business. A buy-sell agreement, funded by life insurance, is designed to ensure the orderly transfer of a deceased business owner's or partner's interest to the remaining owners or the business itself. When an owner dies, the life insurance policy provides the necessary funds to purchase their share from their heirs, guaranteeing a market for the deceased's interest and preventing the business from being dissolved or taken over by outside parties. This arrangement ensures business continuity and fair compensation for the deceased's estate. Question 19. All of the following are standard non-forfeiture options in a whole life insurance policy except A. Cash surrender value. B. Extended term. C. Reduced paid up. D. Automatic premium loan. Answer: D. Automatic premium loan. The automatic premium loan, APL, is a rider, not a standard non-forfeiture option, that prevents a policy from lapsing due to unpaid premiums by automatically borrowing from the policy's cash value to pay the overdue premium. The three standard non-forfeiture options that a policy owner can choose if they stop paying premiums are cash surrender value, receiving the accumulated cash, extended term, using cash value to buy term insurance for the original face amount, and reduced paid up, using cash value to buy a smaller, fully paid up whole life policy. Non-forfeiture options protect the policy owner's equity if they discontinue premium payments. Question 20. Which of the following statements about group life insurance is generally true? A. Each member receives an individual policy. B. Evidence of insurability is always required for each individual. C. Coverage is usually less expensive than individual life insurance. D. It usually has a cash value component. Answer: C. Coverage is usually less expensive than individual life insurance. Group life insurance is typically less expensive per unit of coverage compared to individual life insurance because the risk is spread across a large group, and adverse selection is minimized since most eligible members are covered regardless of their individual health status. While members receive a certificate of insurance, the employer holds the master policy, and evidence of insurability is often waived for eligible employees during the enrollment period. Group life insurance is most commonly term insurance and generally does not accumulate cash value. Question 21. What is the primary benefit of the cost of living adjustment, COLA, rider on a disability income policy? A. It increases the elimination period over time. B. It automatically increases the benefit amount to offset inflation. C. It reduces the premium if the cost of living decreases. D. It allows the insured to adjust their benefit period annually. Answer: B. It automatically increases the benefit amount to offset inflation. The primary benefit of a cost of living adjustment, COLA, rider on a disability income policy is that it provides for periodic increases in the disability benefit amount to help offset the erosive effects of inflation. Once the insured becomes disabled and starts receiving benefits, this rider ensures that their purchasing power is maintained by automatically adjusting the payments, typically annually, based on an inflation index. This helps the insured's income keep pace with rising costs of living during a long-term disability. Question 22. A policy that combines features of a whole life policy and a term life policy, offering flexible premiums and an adjustable death benefit, is known as A. Universal life. B. Indexed whole life. C. Graded premium whole life. D. Endowment policy. Answer: A. Universal life. Universal life insurance is a flexible premium adjustable life insurance policy that offers features of both whole life and term life policies. It has a cash value component that earns interest and allows policy owners to adjust the amount and frequency of premium payments, as well as increase or decrease the death benefit, within certain limits, providing significant flexibility to meet changing financial needs. This adaptability is a key characteristic that distinguishes it from more rigid traditional whole life policies. Question 23. An individual who qualifies for Social Security disability benefits must satisfy a waiting period of A. 30 days. B. 3 months. C. 5 months. D. 1 year. Answer: C. 5 months. An individual must satisfy a 5-month waiting period before Social Security disability benefits can begin. During this period, the applicant must remain disabled and unable to perform substantial gainful activity. This waiting period helps ensure that only individuals with long-term disabilities receive benefits, contributing to the program's sustainability. Understanding this duration is crucial for advising clients on how long they might need supplemental disability coverage. Question 24. What is the primary purpose of a blackout period in relation to Social Security survivor benefits? A. The time during which the surviving spouse is ineligible for benefits. B. The period after a disabled worker's death before their spouse can claim benefits. C. The period during which a surviving spouse receives no Social Security benefits between the time the youngest child reaches age 16 and the spouse reaches age 60. D. The time an individual is unemployed before they can claim Social Security retirement benefits. Answer: C. The period during which a surviving spouse receives no Social Security benefits between the time the youngest child reaches age 16 and the spouse reaches age 60. The blackout period refers to the time frame during which a surviving spouse, receiving Social Security survivor benefits, will no longer receive benefits after their youngest child reaches age 16, and before the spouse becomes eligible for their own retirement or widow's benefits, which typically begins at age 60. This gap in income can create a significant financial challenge for surviving spouses, highlighting the importance of personal life insurance to bridge this potential income loss. Question 25. Which type of care is primarily custodial care provided in a patient's home, including assistance with activities of daily living, ADLs, like bathing and dressing? A. Skilled nursing care. B. Intermediate care. C. Home health care. D. Adult day care. Answer: C. Home health care. Home health care involves a wide range of services provided in the patient's home, primarily focusing on custodial care and assistance with activities of daily living, ADLs, such as bathing, dressing, eating, transferring, toileting, and continence. While it can also include some skilled services, its distinguishing characteristic is the provision of care in a familiar home environment rather than a facility. This contrasts with skilled nursing care, which is highly medical, or adult day care, which is provided in a center outside the home.